Rich Nelson is with Allendale Incorporated in McHenry, Illinois, and he joins us on this particular segment to help analyze the grain market activity that we're seeing today, and it is kind of a mixed affair once again. Let's go to the phones and bring Rich on right now. So, Rich, thanks for joining us today. Of course, yesterday afternoon, USDA came out with their first crop report. It's their crop progress and condition report, and we went through the numbers. We were looking at some planting progress, somewhat irrelevant this early in the season, but at least it gets the ball rolling. We can take a look at the national numbers here. On the cotton, we actually had the planting progress at 4% complete versus a 5-year average of 4%. Also on the grain sorghum, 15% complete, slightly ahead of the 5-year average of 12. And on the rice, 17% done, the 5-year average 14%. Oats, 28% complete, the 5-year average is 34%. So we are getting underway with the planting season across the country. Nothing to compare it to the week before, of course, since this is the first report. But I don't know if you can garner much information from that first set of numbers or not.
You know, we can certainly suggest, like we mentioned this morning, aside from oats, most of these crops are ahead of schedule as far as planting. And winter wheat, like we mentioned, is also still maybe a little troubled in terms of what the number would suggest, that 51 versus 59% last year. As far as some other issues, you know, we do also have some points regarding corn planting. Though though Washington, D.C. did not issue a whole U.S. number yesterday, a few individual states did. Of interest on the corn side, at least, Kansas, 3% complete. That's just a little over 2% normal. Missouri, 1% complete. In fact, that's under the 5% normal. And Texas, 56% complete, and that is over the 43% normal. So regarding these crops right now, I think most of the trade will say, given the moisture situation, it looks like we're going to be okay. The only question is about planting and planting progress ahead of us here.
Generally, as a rule of thumb, it's always harder to rally a corn market on wet weather than it is on dry weather, right?
That's exactly right. You know, in terms of the general mindset is, yes, we may have some problem with the planting, but the crop somehow always gets planted. That's the main message the market sees until we're proven otherwise. And on top of this, you know, some recent news here since the morning session started. We see some other news. FC Stone, one of our competitors, they raised their own estimate for the Brazilian soybean crop itself as well, and that was raised up. In fact, I've got from 109 to now 111.6. Not the highest yet, but this general message is South America is doing fine, and looks like for the U.S., our overall yield situation will probably be okay this year as well.
And from what I understand on different newswire reports, the safrinha corn crop in Brazil, that's our second corn crop. They always grow 2 every year, but it's actually their bigger corn crop of the 2. And from what I understand, there are no weather problems anywhere with it, so it's coming along quite nicely, I understand, too.
That's exactly right, and we do have some rains lined up in the 6 to 10 day forecast for portions of Brazil, southern areas. We also have some good rains lined up in the next 6 to 10 days as well for Argentina. As a whole, this may give us some delayed harvest activity for the harvestable crop, but certainly no problems for the crop itself or the developing corn crop, like you mentioned there as well.
Yeah, May corn right now down 3 3/4 cents on the board at 3.64 even per bushel, and we have the December new crop down 3 3/4 at 3.88 1/4, getting within a penny of its low of the day now. On the soybean crop, we did have some firmness early on, and we're only a penny and a quarter higher on the May at 9.39 1/2 right now. On the wheat trade, we were talking about that earlier. May Chicago wheat up 1 tick now at 4.28, but Kansas City a little firmer with talk of cold weather moving in the next 24 to 36 hours. May KC wheat 3 1/4 higher now at 4.22 1/4. On the cotton market right now, we'll jump over there in the July down 63 points at 76.49 cents per pound. Rich, I'll bring you back in just a moment, and we'll analyze this livestock market activity when we come back. It's always a pleasure to talk with Rich Nelson of Allendale Incorporated in McHenry, Illinois, about the markets. This time we're going to focus on our livestock trade in this segment here. And Rich, I know, of course, your company is well known for doing analytical work, and I just wondered if you had any details about seasonal tendencies in this livestock trade right now.
That's exactly something we got to look at these next few weeks, especially on hogs. In fact, on the hog side, we don't follow seasonals as being a strict issue that you have to follow, but it's something we simply use as a roadmap to look at for potential moves down the road. Now, as far as the seasonals on hogs here, this is actually kind of important here. In fact, the June contract has a break until April 14th. So what we're doing right now is kind of a normal issue. The hogs and pigs and the bird flu-related export problems are problems on top of what happens normally. But April 14th, seasonal low, and then we have a rally until May 12th. So this hog market has been hit with hard, tough news, but should be looking at some higher prices these next few weeks. Cattle side on this one typically has a peak of March 9th. This one, of course, this year's delayed by about 2 or 3 weeks, but it has a sharp break until April 22nd. So on both these markets, we have to watch very closely and might see some potential moves here this next few weeks.
Interesting stuff. Let's take a look at our futures trade right now. We'll start with the live cattle board and run through all these for everybody. A lot of pressure here in the live cattle trade today with the first 4 contract months all over $1 lower, at least $1 or more. April live cattle right now at 118.25 per hundredweight. That's down $1.17. We're within a dime of our low of the day. We have June down 132 at 109.38. And now we have August down $1.12 at 105.68, exactly $1 off of its earlier high of the day. On the feeder cattle side, as we switch over there, we have the April contract down $2.20 at 130.88, only 1 tick now from its low of the day. We're $1.80 off of our earlier high. Now we have the May contract $1.62 lower at 130.18. August down $1.53. No cash cattle trade yesterday to speak of, and we can review yesterday's beef cutout values that came out yesterday afternoon from USDA, because we will get our very important midday update coming up at the top of the hour here, and we'll have those numbers for you. But yesterday, another trend lower on the beef cutout values. Choice cuts down 69 cents yesterday afternoon, according to USDA. That puts that price at $213.43 per hundredweight. And selects at $201.35 would be down $2.65 yet again. This select category has really had a colossal drop here this week. One day it lost over $4 just one day alone. Looking at the lean hog trade right now, on the lean hog market, we have that April contract down 62 at 64.18, and now May down 90 at 68.50 per hundredweight. So that's a dime from its low of the day. We're off our high by over 80 cents now. June down 67 at 71.98. So below $72. What do you see as critical support here in this hog market here?
On the hog side, looking at that June contract especially, you can look back on some of the issues on the charts around this December 1st point. I believe that was around 71.75. And heck, also for that June contract on the charts, there's also what's called a head and shoulders top formation. That suggests 71.57 for a downside objective. So both those targets we're nearing pretty closely now.
On the other hand, what do you see as support on the live cattle market right now?
As far as cattle on this June contract, we're looking at this really this break in this gap. I want to say on some of the charts, I believe that's 108.35 for June. So we are nearing that one as well. So on both these markets, perhaps approaching some important points to watch.
Just within a stone's throw. All right. Well, Rich, thank you again for all your analysis on the markets. I appreciate that very much, and look forward to talking with you guys again soon. Rich Nelson happens to be with Allendale Incorporated, and they are based in McHenry, Illinois.